Ladies and gentlemen, dear friends of BRS, the Belgian Raiffeisen Foundation, I understand that it was perhaps a big dilemma not to stay outside on the terrace, but coming in the cold here of the auditorium. But nevertheless, a lot of people took the challenge and are here present today, and we wish you all a warm welcome to this already number 12 edition of the Microfinance Lunch Break. And these microfinance lunch breaks, meanwhile, have become a landmark in the Belgian financial and economical circles. As a lot of you already are aware of, the aim of these microfinance lunch breaks is to raise the awareness and to increase the interest for the challenging world of both microfinance and microinsurance. Today, we go already through the 12th edition, and you can state there is a real interest for the subject. And as promised earlier, we will try and alternate the subject between microfinance and microinsurance in the future. BRS is convinced that together with ADA, Febelfin, Assuradia, KBC and SERA, it has strong partners who are convinced of the important role microfinance and microinsurance plays and will play in the future. And they are all willing to support this initiative very actively. I especially would like to thank KBC, our valued structural partner for BRS, for their support and generous hospitality for our microfinance lunch breaks. We kicked off the first edition of this microfinance lunch break in February 2009 with Damien van Stauffenberg from Microrate, who dealt at that moment with the issue of the impact of the financial crisis on microfinance. And since then, through a number of well-known and experienced speakers in review, we discussed a variety of issues of the world of microfinance and microinsurance, ranging, amongst others, from regulation over risk coping mechanisms to governance issues and so on. And so we are here again today with a new question. The business of doing good. Can a real customer-centric approach be the key driver of commercial success? Question mark. Customer-centricity, as we all know, is the foundation for both the social and financial performance in microfinance. But too often, the focus is on good products rather than good organizations. Anton Simanowitz, our today's honored speaker and author of the book, The Business of Doing Good, will outline what it takes to create microfinance organizations that consistently deliver positive change for their clients and succeed in increasingly competitive markets. Today's presentation will start from the story of AMK, a microfinance organization that has pushed the boundaries of possibility to reach deep into rural Cambodia and now touches the lives of almost 2 million people. No doubt, an inspiring story. For 20 years, Anton Simanowitz has supported microfinance organizations to be more effective. He led a consortium of 12 organizations that developed the content and training materials for what has now become the universal standards of social performance management in microfinance. And at Oiko Credit, our colleagues, he designed and managed a monitoring program implemented in 10 countries to support investee social performance. And I can bear witness to Anton and his sincere focus to what really matters in microfinance and microinsurance, i.e. to take care that clients are getting better of it. Indeed, at BRS, we have learned to really appreciate Anton some while ago through his very important contribution he delivered in setting up the standards in social performance for the microinsurance business. Nowadays, Anton is director of the Business of Doing Good, a consultancy that works to improve outcomes for microfinance and other social businesses. So, ladies and gentlemen, once again, we have a challenging subject and a renowned speaker. Together with you, I'm looking forward to an undoubtedly fascinating presentation. And after this presentation, as usual, there will be a questions and answer session, followed by some closing remarks addressed by Patrick Kind, Marketing and Communication Manager here at KBC. I'm now very happy to give the floor to Anton.
Good afternoon. It's a real privilege to be here today. Our conversation focuses on what does it take to create organizations that are successful in delivering impact and are also commercially successful. Some of you, I don't know who, may have heard of the Cobra Effect. Back in colonial India, they had a problem with venomous cobras in Delhi. And the colonial administration came up with a great idea to pay people to bring in the skins of dead cobras. This all worked really well for a little while, but then some bright spark got the idea to start farming cobras. Well, the administration got wind of this and they stopped paying. And the cobras, the farmers had a big pile of cobras that they didn't know what to do with, so they let them back out into the wild. So we've now got a situation, there's more cobras in the wild than there were at the beginning. Some of you may have had a similar experience in your lives, where you've had a good idea, and then you've realized that things are more complex and more difficult than you expected. I remember the moment for me when I first realized that for organizations, good intentions are not enough. Here we go. I was working for an international development charity in Kenya, and I went to talk to a group of poor women. It was a really bad situation. The rains had failed 3 times. And the women talked to us about how bad things were. Livestock were dying. People were leaving the area to look for food, to look for work. And during the meeting, some of the women fell asleep. And they were really embarrassed about it. And they explained, look, we're not being rude. It's just we haven't eaten today. At the end of the meeting, something really strange happened. The women started taking out money, and they gathered that money together, and they gave it to the field officer. He wrote in his book, put on his helmet, got on his motorbike to leave. And I said, well, what's going on here? These are starving people, and they're giving you money. He said, no, don't worry about it. Look, it's their loan repayment, 100% repayment, no problem. So I said, can we just go back and talk to these women, see what's going on? And we asked them, how are you able to pay this money when you say you're starving? And they explained to us, look, we have to pay this money. If we don't pay, we're not going to get another loan in the future. It's our commitment, it's our obligation. So I asked them, how are you paying this money? And they said, well, we sold a chicken this morning. And that experience really shocked me, not just the fact that starving people were selling food to pay a development charity, but that there was such an obvious organizational failure. This was an organization 100% committed to reducing poverty. It wasn't trying to make profits. There wasn't a problem with the products or services. What they were doing was fine. It was a failure in that staff member recognizing that things weren't working. It was a failure in the communication, that the organization wasn't learning about what was really happening on the ground. And that moment has lived with me for 20 years in my professional work, supporting organizations to be more effective. And it's the question that really is at the heart of this book. Why is it that organizations seeking to do good in the world so often miss opportunities to do better, and sometimes actually hurt the people they're trying to serve? But the book and this presentation today is not about failures. It's about the practical steps that organizations can take to do better. It's about the details. It's about the small changes that they can make in their products and services, in the way that they work, that really helps them to deliver the outcomes that are needed for the people they work with. The book focuses on 6 insights. And obviously, we haven't got time to go into those in detail today. But broadly, the insights are in 3 areas. They're about the clients, understanding the people that we're working with, and really making sure we have the right products and services. It's about the people in our organizations and making sure that those people are delivering what we intend to deliver. And it's about the business model to ensure that we can really do what we set out to do. We were interested in writing this book because AMK is such a good example of an organization that is delivering on its intentions. So why is AMK interesting? First, it's about scale. They are now reaching some 400,000 people throughout Cambodia, touching the lives of 2 million people. They do this through a staff of 1,800 people, through 140 offices, through 1,600 agents who are taking savings and remittances. This allows them to reach out to 87% of the villages in Cambodia and really achieve their statement in terms of finance at your doorstep. But for AMK, it's not just about numbers. Half of AMK's clients live below the national poverty line compared to 20% of people in Cambodia. So they really are reaching out deep in terms of reaching people in poverty. They provide a full range of financial services now: credit, savings, microinsurance, transfer services. But all of this would mean nothing if they were not having an impact on people's lives. And AMK's internal research demonstrates a real positive benefit of these services on the clients in terms of their well-being. But AMK is also a business. In 2013, it generated some $3 million of profit, a return on equity of 18%. And this financial performance, understandably, is achieving both interest from commercial as well as social investors. So the first part of the book is about the clients. So often we hear talk about client focus. We talk about the need to be responsible, to be responsive to clients. But AMK makes a distinction between client wants and client needs. Most microfinance organizations really take the business of doing a loan appraisal seriously. The need to really understand people's cash flow, to ensure that you're not putting people into debt beyond their capacity to repay. For AMK, they've recognized that it's important to do a home visit as part of this process. So the client officer goes out and they actually visit the client in the home as part of that process. This obviously adds time, it adds complexity for AMK, it's a cost to the organization. But it's also something which is not what the clients want. Clients want fast service, but AMK feels that they need to have this house visit. We make many assumptions about our clients. We make assumptions about who they are. We make assumptions about the products that they need. We make assumptions about how they use our services. In Cambodia, it was assumed that rural farmers needed loans that were end-of-term loans, so that they repaid them at the end of the harvest. But AMK didn't accept this assumption. They went out and they did their own research to really try to understand the lives of rural Cambodians. And what they found was something very different to what they'd assumed. In reality, the need for money wasn't just once in terms of buying fertilizer. The need for money came throughout the growing season to pay for labor, to pay for help with planting, to pay for weeding. They found that people's livelihoods were not just dependent on agriculture, that people had income from other sources. And they found that people's need for money wasn't just about investment in agriculture. They needed money to help cope with health emergencies. They needed money for other opportunities, for day-to-day and life cycle needs. They also found that people's ability to repay wasn't just linked to that harvest. So what they found was that clients needed flexibility. And through this, they designed what is known as a credit line product, so that clients can draw down money when they need it. So rather than paying interest on a loan that they will use over a period of time, they draw down what they need at that time with the knowledge that they're entitled to draw down the rest of the money later. They also have flexibility to repay when they have the capacity to repay. And AMK also spreads the risk of the loan over 2 seasons rather than 1 season. AMK's success was not just in understanding the client need. It was not just in designing the product, but it was about having the conversations in the organizations to build that understanding, and to build that the commitment at the board level, at the management level, at staff level, to implement what was seen as a very risky product. So when they first came with this product, there was a lot of resistance in the organization. So there had to be that process of really building that understanding and buy-in in the staff. The second part of the book is about the people in our organizations. We can have great products and services, but it's people that deliver them. So often in my work, I see a reality gap between the theory of what the organization says it does and what's really happening on the ground. Often organizations don't recognize what is really needed from a client perspective. They don't recognize what they're doing, that is valuable. They don't manage what matters. So at some stage in AMK's journey, they experienced a problem with lack of quality in the house visit. So because of a pressure of growth, because of a pressure of targets for the staff, people started taking shortcuts. The house visits weren't done, the assessments were done in the group meetings, and really there was a big loss of quality in the organization. And this was exacerbated by the financial crisis, which really came at either the right or the wrong time, but really highlighted this problem. AMK responded with zero tolerance. Management came in and they recognized the value of this process, and they actually fired 30 staff at that time. But it's not just about command and control. We can't manage everything in the organization. Not all of us have to cross a river on the way to work, but how do we build that understanding? How do we build that commitment from our staff so that they are really delivering what we intend? For AMK, this starts with feeling valued. AMK's salaries, their benefits for staff are very good, particularly at the lower levels. It also starts with trying to look at the organizational culture. So if you look at the Southeast Asian culture, there's a very hierarchical structure. And AMK has set out to really challenge that structure so that people talk to each other. They've done that by ensuring that everybody wears the same clothes. So when you go into the office, you can't tell who is the manager, who is the member of staff. Everybody wears the same clothes. People refer to each other not in terms of sort of hierarchical sir, madam, but brother and sister. And that really works, that actually you find that people are able to talk to each other. When I went out with the driver to do field visits, I was really struck that the driver who took us to the field sat with us at lunch. The driver stayed in the same hotel as us in the evening. The driver got the same per diem as the CEO. So often, it's the first time in my life when I've gone out and actually the driver's even been in the same hotel as me. And by having this way of trying to break down the hierarchy, what it does is it encourages people to talk to each other. This is also done in a formal way. So they have 360-degree appraisal. They have what they call the open house visits, so that the senior management team visit every branch in the organization twice a year. And this is an opportunity for the staff to share their experience, to come up with ideas, to raise questions. It's also an opportunity for the management to communicate back to staff. This communication also happens at the board. So AMK has set up what they call a social performance committee at the board level. This is a full-day meeting that takes place before every board meeting. And the purpose of the meeting is to really get feedback from the research department, to question the decisions that are going to be made by the organization, and to bring that customer perspective into that, to say, what does this mean for the people that we're serving? What's interesting about the Social Performance Committee is that it's not just something that happens, it's something that is really valued by the organization. And what you find is that it's not just the committee members who attend the committee, but it's the whole management team, it's the whole board that come to those meetings, because they really value the conversations that are taking place. They really value that perspective on thinking about how do we understand the client perspective in this? How do we balance the commercial and the financial side, of the social side of what we're doing? The third part of the book is really about the business model and developing a business model that works. We hear a lot about the win-win between customer focus and commercial success. But there's not always a business case for everything. The customer focus sometimes makes sense from the customer's perspective, but there's not necessarily a business case for it. But sometimes, while there may not be a business case, there may be a business model to make it work. So how do we ensure that our vision for what is possible is not constrained by conventional wisdom? For AMK, the conventional wisdom was that it wasn't possible to go to the remote and the rural areas of the country and be either sustainable or commercially successful, profitable. But AMK built a business model to do this. They set what they called an outside-in growth strategy. So they went to the most remote, most rural parts of the country first, and they gradually worked back into the more urban areas. Clearly, this wasn't a good commercial decision at that stage. But AMK made it work. They built the business model to make it work. And they did that by making tough decisions. So, for example, they had to increase productivity of staff. So whilst other organizations were serving 400 or 500 people per client officer, AMK increased the productivity up to some 900 at one stage. This was supported by using local structures, the village bank presidents, to help. So they innovated to make this possible. AMK also made the organization more efficient. They looked at the methodology and they looked at what could they cut to reduce costs. But they did this in a way which really had an understanding of what was important. So going back to this question of managing what matters, they identified that the home visit was expensive, but they didn't cut it. They retained it because it was important. Reflecting back on AMK's strategy, actually over time, you can see that actually it made commercial sense, even though in the short term at that time it didn't make sense. AMK established a huge footprint in the organization because one of the ways to make this work was to achieve the numbers. So AMK grew to be the largest microfinance organization in terms of outreach. What that did, it meant that they were going to areas where there was no competition. Cambodia is now one of the most competitive microfinance markets in the world. AMK built that footprint, they built the client loyalty, and now where everybody is talking about diversifying and cross-selling other products, AMK has this huge base that they can work with. What's been interesting about writing this book and looking at the history of AMK is thinking about the historical perspective and looking at how things change. Part of this is about me and my judgment of organizations. A lot of my work is going into organizations and looking at what are they doing now and making judgments and making assumptions about what would be better, how they could improve. Looking at AMK's history, what I see is the reasons and the understanding behind what they're doing today. And it actually gives a very different perspective in terms of the reasoning and the rationale for what they currently do. But looking at how things have changed, it's also interesting to think about what is that business model? How do we find that right balance between understanding the customers and their needs and building the business? And it's not about doing something that's static. It's about how do we change and adapt to the changing conditions. So if you look at AMK today compared to 10 years ago, everything has changed. The economy in Cambodia has grown massively. The rural infrastructure has improved. The organization has changed. It's a much stronger organization. Its products and services have changed. The clients have changed. The sense of what is possible, the empowerment of the clients in terms of actually being more demanding as customers has changed. But what hasn't changed is AMK's understanding of its clients and its commitment to its purpose and its understanding of its purpose. I want to just give 2 examples of this. The first is how the organization balances social and financial performance. As AMK became more profitable, this question about what is a fair return became something that the board started debating. For AMK, the focus is not on making profits, but the profits are the means to its end. So the board made a decision that there should be a limit in terms of financial returns and set a broad, they didn't set an actual target, but a broad parameter to say return on equity should be in the 15 to 18% range. Interestingly, they actually translated this into targets for the CEO. So the CEO had not just a target for its profit, but the CEO was penalized if profit went above a certain amount. So actually, if it went above, I think, 20%, the CEO would lose his bonus completely. That was also translated into incentives for the staff. So staff were given a bonus for working in the hard-to-reach areas. So there's a recognition that if you're trying to motivate staff to do difficult work in an excellent way, people are going to look for shortcuts. So you need to reward them to do the work in those harder-to-reach areas. There was also an interesting perspective in terms of new investors, and we will hear from Kurt in a little while about Incofin. But that conversation about returns and what was expected and how we balance the social and financial performance was very much part of the conversation that AMK had with its new investors. The second example I want to give is the example of over-indebtedness and the problem of multiple lending in Cambodia. As the market has become more competitive and more organizations have moved in, there's become a problem with multiple lending and in some cases some serious problems with over-indebtedness. AMK's response was always to say, we will not lend to people, we will not give more than one loan to people. So AMK had a policy that if a client went to another organization and took another loan, they would then reject them if they came back to AMK for a second loan. What started happening, obviously, is as competition grew, AMK found that more and more of its clients were going to other lenders. And when the credit bureau came in to force and they could get good information on this, they found that something like 1/3 of their clients actually had a loan from another organization. So going back to basics, going back to understanding the clients and their needs, AMK's response was to say, it doesn't make sense either commercially or from the customer's perspective just to start rejecting people. And they came up with a policy which they call their internal multiple lending policy. So AMK will now give a second loan to its own clients based on its rigorous cash flow analysis and its loan appraisal system, because they feel it's better for clients to take a second loan with AMK in a managed way than go to another organization and take multiple loans with other organizations. So we see this change in way that they're working, but this fundamental understanding of clients driving what they're doing. So some final reflections. Talking to the CEO of AMK, Baran, after having written the book, I asked him about the financial crisis, and I asked him about the loss of quality that AMK had at the time, and whether they had learnt the lessons, and whether AMK would be better able to deal with those challenges when they happened in the future. And his response was really interesting. He said, yes, we've learnt, but actually everything has changed. We're not the same organization. Those challenges are never going to happen again. But we are a stronger organization to face whatever challenge comes in the future. And I think the lessons from AMK, the lessons in this book, really are about how do we deliver on our good intentions in a changing world. It's about understanding the clients, making sure that we have the right products and services that respond to their needs as well as their wants. It's about having the conversations in the organizations, making sure there's a connection between the operations and the understanding of the clients, and that we are continually learning and improving what we're doing. It's about managing what matters, ensuring that the quality of what we deliver really is what's needed for the customer. It's about ensuring that we build that understanding of our staff so that we really are tapping into their potential to be part of our delivery as an organization. It's about building the business model so that we deliver what we want to deliver, not what conventional wisdom says is possible. And it's about adapting to this changing world. So these are the 6 insights for microfinance organizations in general and for the business of doing good. Thank you.